So I have an announcement to make. If you want that nice guitar, maybe that nice vintage guitar, maybe that nice rare guitar, that limited edition guitar that everybody wants, now is the time to buy it because Wall Street is coming and they're going to drive up all the prices before you know it. So hi folks, welcome back to the Ministry of Guitar. I'm Utkarsh. If you like what I'm doing on this channel, please do like, subscribe and share. I know I say it, but it really helps, and honestly, you need to have motivation to make these videos because otherwise, if nobody's watching, what's the point? Okay, now let's get on to this topic. I want to give a little bit of background on this one. I want to give this background on myself and where I'm staying, and this will help you understand why I'm going to bring it around to guitars and Wall Street. I live in Singapore. So if you think about the financial centers of the world, there is New York, there is London, there is Hong Kong, and ever increasingly, it's Singapore. Singapore is a financial hub for this part of the world. The consequence of this is that I'm very exposed to the financial part of the world, and a lot of my friends work in finance. And the reason for this is I graduated from university in 2008. April 2008. What happened, or what was April 2008 if you think about it in history? Forget me. That was peak Wall Street if you think about it, because 2008, September-ish was when the financial crisis happened with Lehman Brothers collapsing. So all throughout the time that we were trying to get jobs, and we were trying to get jobs in the final year of university, everybody was entering the financial industry. So everybody that I know, a lot of people have entered the finance industry, people are working. I have friends who worked on Wall Street at the time of Occupy Wall Street, etc. So I do have a very, very detailed view into that world, as much as I have a view into the guitar world. Now, I've realized a few truths about that world. One thing that happens with shareholder capitalism is that, and whether you like it or not, it's true, is that capital attracts more capital and the rich get richer. It's just the way it is. I'm not talking about whether it's good or bad. I'm not going to make this a communist, Marxist versus capitalist discussion. I'm just going to call out things for the way they are. So the rich get richer. People who have capital accumulate more capital. I have seen this happen in my own life because I accumulated some capital with my first house, then I leveraged that capital, then I got more capital, blah, blah, blah. So few people who realize the nature of money makes more money end up making it. A lot of us just end up working for money. Again, not what this video is about. But what is the consequence of capital attracting more capital? It generally means that rich people, which is a very small percentage of us, I'm certainly no part of this high net worth group, but in general, rich people always have a lot of money that they want to keep investing to create more money. Nobody wants to keep their money in cash. Jeff Bezos is not keeping his money in cash, or so on and so forth. So rich people are always looking for investment opportunities, and their vessels to do this kind of investment opportunities generally Wall Street, hedge funds. That's what happens, investment bankers. So people are always looking for investment opportunities. One consequence of this is that the obvious investment opportunities are all well saturated. You have the S&P 500, stocks, you have then stocks in other countries, so you have companies, then you have private equity for or venture capitalists for startups, etc. They're always looking for more money. Now, one of the other aspects that these folks at Wall Street have recently started discovering, relatively recently, is alternate assets. And I'm not talking about Bitcoin. Art has become a big alternate asset. It has outperformed the stock market, frankly. In fact, just today morning, I got an ad to learn how to invest in art, which I found fascinating. I didn't read it, but I could understand how this would be working. And then a lot of people, there have been Wall Street funds that have been investing in vintage cars, vintage Porsches. So it is but inevitable that this esoterics is not the right word. Forgetting the word. Anyway, this world of people constantly seeking to make money, they're going to look for opportunities elsewhere. And when you look at what has happened with vintage guitars and rare guitars, the guitar market is very, very weird. Some things go up dramatically, some things go down. Some people say it's a bubble. But if you look at it numerically, the guitar market has, especially vintage guitars, especially things like pre-CBS Fenders, bursts, and not just that, even if you look at ordinary vintage guitars, some of them, 60s Strats, even 70s Strats, if you look at the returns that they've been giving relative to the market, they have been crazy. Now, the hedge funds, the Wall Street folks haven't gotten here yet. And I think the reason they haven't gotten here yet is because the market is very weird. You really need an expert. right? A guitar, me and you would be an expert because we would know, okay, this is how much a 80s Gibson is, Norded era Gibson is worth, this is how much that is worth. But what you don't really have right now is you don't have somebody who's an expert on the market and who is, they're also working then with Wall Street or with a hedge fund to figure out where to invest the money. And these amounts of money for these vintage guitars, I'm sorry, I know you and me consider $200,000-$300,000 to be a huge amount of money, but that is pocket change when it comes to these sort of funds. They invest millions, not millions, they invest billions of dollars. So what's inevitable is that at some point in time, when they run out of avenues, when they're like, okay, I'm saturated in this, I'm saturated in emerging markets, I'm saturated here, let us look at this particular, let's look at vintage watches, let's look at vintage guitars, let's look at, like we've been looking at art. And then they're going to see, and then somebody's going to make the case. And remember, it's not like sometimes, these things are self-fulfilling prophecies. You have one investment firm that gets in on it, and then more investment firms jump in on it, and it keeps going up and up. That's kind of what's happened with art, honestly. So you're going to have, at some point in time, that they're going to realize, oh my God, vintage guitars or rare guitars, things like even the Paul Reed Smith Super Eagle, for example, just taking a modern guitar, for example, they don't have to be vintage. These are worth investing in. This worth looking into. They tried to do a bit of it. It wasn't really Wall Street. It was this weird company called Raleigh with the Gibson thing. That was a very stupid exercise because the valuations were way off. But that shows you that that seed of an idea has been already kicked off in a lot of people. Now, what does this mean? I think it's good news and bad news for guitarists. I think the bad news is that a lot of these guitars that are dream guitars, more from a psychological standpoint, I want a vintage Strat, I want a vintage Les Paul, those things are going to get a lot more expensive when this happens. So that's the bad news. So if you want it, it's going to get even more unaffordable. They're not getting cheaper anytime soon. I know that there are a lot of comments, this is a bubble, etc. Guys, you don't understand the cultural impact, the mythos factor of rock and roll. It's there. It's going to last for centuries probably. It's like the Renaissance. So it's not like because the boomers die. I've talked about this in other videos. It's not like because the boomers die, the rock and roll will die. It's a myth now at this stage. So that's one. And it's so linked to geopolitics with the entire 60s. That whole thing is just something else. So that's one thing. So things are going to get a lot more expensive. The good news is it's not like good guitars are going to get a lot more expensive because now you can get amazing guitars for $500, $600, like the BRS SE Swamp Ash, SAS Swamp Ash Special Bolt C. What was it called? Yeah, the CE24. Sorry, my apologies. The BRS SE CE24, the cheap one. You can get that. You can get so many guitars for less than $1,000 that are amazing, made in Indonesia. So there's so much good stuff out there. So it's not like instruments will get more expensive. It's just that these instruments that are fetishized to the points of being memorabilia, they're going to get a lot more expensive. The good news is if you own them, great for you because they're going to probably be a good retirement account for you at some point in time. But you have to be aware of this. Now, I want to share my experience. So given that I have a huge guitar collection, I don't have too many vintage guitars, but I have a lot of rare guitars and a lot of them have gone up in value. I have often been approached and told by my friends that why don't you start a guitar fund? I'm going to invest into it. So a lot of people have already told me, because I live in the financial hub, and given that I do understand both the financial world and the guitar world, a lot of people have actually asked me to start a guitar fund. And I've thought about it, and I've had 2 or 3 thoughts. I did strongly consider it. The reason I decided not to do it is, one, I thought it will completely interfere with my passion for guitar because if I'm going to start looking at it completely financially. Number 2, I think it will drive up prices for a lot of people who want nice guitars. So that's the reason why I was like, no, I don't think I want to do that. And thirdly, for me, for it to really make sense for my time, think of it, right? How a fund works is that the fund manager gets paid a small percentage of the fund size. Say they take a 1% on the profit, etc. So say if I wanted to earn $100,000, I would need a $10 million fund to justify that kind of return. And think of the amount of vintage guitars that make up $10 million. The market is not really that large enough, or maybe it is, but I don't want to get down the round of searching for, then my whole life will be dominated, searching for a good priced burst, searching for a good price pre-CBS. And I'll probably end up hogging the guitar market, which I don't think will be a good thing. even if I can access such capital right now with the connections that I may have. So the compromise that I have come to is that I have people who have co-invested in my own guitar collection, what I already have. I've given them a very rational view. This is the return that you can expect. Some of them will be inflation hedged. Some of them have major upside potential because they're very rare, etc., etc. So that's kind of the mid ground that I've come to. But my message here is not about me. It's really for you guys to know that this is coming. If I won't do it, it's not like I am the only person who knows the guitar market and knows finance. There are plenty of people out there. In fact, Mr. Gibson himself, Caesar, is from the world of finance. He knows this very, very well. So yeah, guys, just know about this and do whatever actions you need to do. I'm not saying it's going to happen tomorrow. Probably the market's going to be very soft for a year or so. We know the guitar market is very soft right now. But long term, this is going to happen. So just be prepared for it. All right, till next time.